Joining me now is Andrew Graham, Managing Partner at Jackson Square Capital. Andrew, great to have you back.
Thanks for having me back. It's good to be here.
Second time this summer. You were last here in early July, so
Yeah.
we'll check back in with you on how your market view has changed. But
Good.
before we do, let's talk about Nvidia, because Nvidia just delivered another record quarter,
Yeah.
getting rewarded today, which was sort of the question: will Nvidia be higher or lower after earnings? Does this put the AI spending slowdown fears officially to bed?
No, definitely not. It's just going to creep up again, I suppose. I think Nvidia, the most, like you said, it's up today after earnings. They had 4 quarters in a row where they had excellent earnings and awesome guidance, and the stock went down. It didn't go anywhere. And so the multiple is compressed down to 21 and a half times, the lowest it's been in a decade. Should you own it? Yes, you should definitely own the stock. Is the questions around circular financing and all the rest of it going to go away? No, it's still going to be an issue. But bull market climbs a wall of worry. I suppose a lot of these stocks have to do their own climbing of walls, and Nvidia, I think, is laying the foundation for the full stack of AI, and that includes owning the land and the transportation and all of it.
So you say, should you own it? Yes. Should
Definitely.
you buy it here?
Yes.
When you were last on in early July, you actually picked Broadcom over Nvidia.
Yeah.
Would you still pick it here?
I'm not afraid of Broadcom or its sort of mini-me, which is Marvell, which is going to report earnings tonight. Both, I think, have a great opportunity. I think it's coming later, though. So you're going to get customer clients or corporates. They're going to have multiple ASICs, right? Different semiconductors for different purposes within inference. And probably, in my mind, the guess is that the incumbents like Broadcom and Marvell are the ones they're going to want to go to for a partner in terms of developing those chips. So yes, it's coming. It's probably a 2028, 29 kind of story. But yeah, Broadcom's been a little bit weaker than I would like to see, but I'm not afraid of it at all. And I think you give it a little bit more room than you would another stock, because business is booming.
And it has bounced since you were last on, but
Yeah.
last time you were here, we were seeing this pullback in tech
Yeah.
stocks, and you said that was the opportunity to reload. It has since bounced.
Yeah.
So has that ship sailed?
No, not at all. I think the bounce that you got was just after sort of a momentum unwind, which is, I think in this cycle, this is probably the 8th time it's happened. And it just happened again. We had 3 weeks of calm, and then all of a sudden we got into August, and you saw, the momentum pairs like down 33% or whatever. So it's really a unique time, I think. It goes back to something which is the pain trade, which is always to look where everybody's sitting on one side of the boat, you go have to take the other side of it. And I think as we go into September and everybody's got their, head full of September seasonal weakness and midterm elections, all the rest of it, the pain trade's probably too much cash. So I think you should put it to work. You should look to put it to work. Admittedly, we're in the middle of summer vacation season, and so it's a little tough to derive too much signal from price action. But I think when we get back in September, conference season starts, I think you're going to see opportunity there, because that conference season is usually an opportunity for corporates, for management teams to guide the sell side lower. I don't think that's the case. It wasn't last year, and I don't think it's going to be this year either. We're in the middle of just a boom in earnings growth.
If I have cash to put to work and I'm
Yeah.
underweight tech, if I don't have enough exposure to tech right now, do I put it to work today, or do I wait until September when maybe we see, or some of the volatility
Right.
that we could see around midterms?
So we do a little bit of technical stuff. We don't like to admit it. I'm a CFA. I went to school to, I'm supposed to know that. But so we, in the dark, in the shadows, we're doing some technical work. They're not perfect yet. They're not there yet. And we want to make sure we're buying stuff at the exact right time, because what we found is clients don't like to lose money. So none of them look super easy. I think Marvell looks good going into earnings tonight. I think they're going to get rewarded. The deal they did with Google is $20 billion, is transformational for that company. And I think the buy side at the time was at $12 billion. So I don't know if it's in a lot of numbers yet. They're going higher, I would suspect. I think they get rewarded.
Okay, so Marvell is a pick. Your 2 highest conviction Mag 7 picks, last month, or I guess, in early July 9th, were Alphabet and Amazon. Would you say those are still your highest conviction picks?
Yeah, and you gotta throw Microsoft in there as well. And I think there's just a group of software stocks that seem to be built for this inference agentic economy. Microsoft seems to be one of them. And so does Twilio. Just looking at the quarterly reports. And so does Shopify, believe it or not, and Cloudflare as well. So those numbers just hockey stick straight up in Q2. And I want to see what they do when they report next. But yeah, that's an interesting group, I think, within software. There's that little niche in there, and those are the names that we've identified that I think look good.
There are a lot of software stocks on steeper sale than Twilio, which is up more than 60% year to date. Cloudflare is up 50%. Names like Snowflake up 50%. So you say those are the beneficiaries of this inference economy. What's your view on software overall? Did you find any, first of all, would you buy those names here? And do you have any cheaper names that you could recommend?
We would buy Twilio in here. We own Cloudflare. Admittedly, it's an expensive stock, right? A very expensive stock. But they're really well positioned. So you wait for your pick your spot on Cloudflare. I think when you're talking about sort of the old, the out of favor software names like Salesforce, which just had a good earnings print.
Yeah, in favor today, up 20%.
For sure, and I'm sure there's a lot of people who are short the stock, and you got to cover. But they're showing signs of the ability to monetize their AI product and at higher levels, higher prices. So good for them, and I suggest it's probably going to be others as well. So is it time to trade out of semis into software? No, you probably have enough dry powder. You can add some. For me, I would add those faster names, but on pullbacks, if you get them. Small pullbacks, but yeah, I would add those faster names.
If you could only add one, Snowflake, Cloudflare, Twilio, which one would it be?
I think it would have to be Cloudflare. I mean, it's been with me for a long time. We've owned it for a long time, almost as long as we've owned Nvidia. I mean, it's a newer company, but yeah. So that's I think the crown jewel. But we have bought little bits and pieces of Twilio, sort of adding it slowly as well.
Time for a quick break. Thanks to GoDaddy for sponsoring today's video. I wanted to try something a little bit different with GoDaddy Aero AI Builder. I haven't updated my personal website in years, as you can probably tell. So instead of starting from scratch, I pasted in the URL from my own website to see if it could give it a fresh new look. Within minutes, it had redesigned my site. No code, no templates, just one URL. Then I refined it through conversation until it looked the way I wanted. I asked it to update the color palette, swap in new photos, rewrite some of the copy, and link to my video interviews. It made those changes from those prompts. When you're ready to publish, hosting, security, and a subdomain are included. Every build is also optimized for search engines like Google and AI answer engines like ChatGPT and Perplexity, helping people discover your website from day one. Whether you're starting from scratch or giving an existing website a refresh, it's an easy way to turn an idea or an existing website into something that feels brand new. Click the link in my description or scan the QR code to start using GoDaddy Aero AI Builder with 50 free credits. Thanks again to GoDaddy for sponsoring today's video. We haven't gotten to rapid fire yet, but Cloudflare or Microsoft?
In here, Microsoft, yeah, at the moment.
So across all of tech, chips, hyperscalers, networking, software, cybersecurity, where do you see the most upside from here? Networking for sure.
So you've got scale across coming, which is data center interconnect. Right now, there's about 1 million ports dedicated to DCI in the United States. That's going to go to 20 or 30 million over the course of the next 4 years. That's a big opportunity for anybody who's in the Jericho L3 style switch making business, which is Cisco and Arista. And those two names look great. And as you go further out the curve and you get into the scale up architecture, which right now is dominated by NVLink, which is a product, of course, of Nvidia, that's all going to change to Ethernet-based products that these guys make, Cisco and Arista. So those are probably our two favorite names right now, period, full stop, and we want to own them for the long haul.
Not just your favorite names, though. They're both up almost 50% or more than 50%. Not too late to get in?
Not too late to get in. Although, we look at these things, I look at it every day. Unfortunately, I'm moving around a little bit today, but spend a lot of time, checking things out. Arista looks great right now.
So your price target was 78.40 by year end for the S&P 500. Are you sticking with that?
No, we're going to lift it based on what we've seen from earnings and estimate revisions. Estimates, since the start of the Iran war or whatever, have gone up 16% for 2026. We're going to do, the S&P is probably going to do 32% earnings growth this year, something like that. And next year, if it goes down to 12, 13, don't care. That's not a bear market. That's double-digit earnings growth, and you don't want to pick a fight with that.
So lift it to what? TBD?
Sure, 8,500. It's such a tough thing, especially by year end. Like, I don't work on a calendar year end. I'm like on a rolling 12-month basis. That's all that matters, is we stay ahead of the curve that way. But higher, yeah.
Okay.
We could put a number on it.
If I had $10,000 sitting in cash right now, how much of that money would you put in this market today?
2,000.
Okay.
Because I think you get another opportunity here, and they're just kind of waiting for spots. Like, nothing looks perfect, nothing looks easy, and a lot of it's kind of murky because of the time of year. And I think one of the reasons why the Treasury probably stepped up their purchases because of illiquidity this time of year. It's my least favorite time for the market. It's dull, it's boring, the price action doesn't really mean as much as it should. But again, I think you're going to have a really bullish September corporate meeting season, and management teams will have an opportunity to sort of guide, whether they give numbers or not. And I think you'll see numbers go higher at those meetings in September. So if we're looking for September seasonal slowness, seasonality's such a dumb concept anyway for me. I'm like, well, come on. And midterm elections, I think 32% earnings growth wipes all that out. 12% next year, 13%, if that's your guess, wipes it all out.
So I'm trying to look at the timeline, though, because it's what?
Yeah.
August 27th right now, and you're saying September is going to be bullish. So the other 8,000 of that 10,000, we're getting a pullback like tomorrow, you think? Or
no, I don't know about. I wouldn't say so much pullback. It's not just pullback. It's price and time for us, and you can see it. And we've created technical screens that help us get to that moment where you can tell when things are sort of washed out, when things change. I think soon.
What's the signal that you'd be looking for? What's the signal that a retail investor should say, okay, I think this is it. This is my chance.
They're pullbacks to oversold levels and whatever you want to use as your guide there. So if you're using a slowed stochastic or something like that, I think that's probably the best tool. And then within good technical chart patterns, and you've got to have that fundamental pipeline too. Like, the good thing about being a professional is you've got all these sell side firms giving you stuff all the time. You've got this pipeline. And it's really important that you stay on top of these stories. So it's tough. Somebody comes on TV and tells you to buy Marvell, and you might own it for a while, and then all of a sudden the story falls apart. So staying on top of the story is critical. And the fundamentals of all the names that we've mentioned are excellent. It's just like they're not quite there yet, and I'm hoping that they get there. And I think it's just time. I think maybe even, who knows, 2 weeks from now.
Okay. We've focused a lot on tech.
Yeah.
What are your favorite areas outside of tech to invest in right now?
Healthcare. Yeah. And then, if you want to go back to the seasonality midterm thing, healthcare is the one that acts the best through there. It has defensive characteristics, obviously, and it's had a good run too. Lilly's our biggest position in the broad healthcare universe, but we've recently added to our dividend yielding portfolios of a lower beta strategy. We've added some of the, healthcare services names like UNH and CVS even and so forth, grab the dividend and go along. So healthcare would be number one. I'm really interested in retail and in consumer discretionary. You saw the flash PMI data last week for August. It probably lines with about 3% real GDP growth, where we did 1.5% real GDP growth in Q2. That's a pickup in business momentum. And I think that's what you've got to brace for. And it's almost like the cyclical stocks, and you can put consumer discretionary in that group, look like they're waiting for permission, to go higher. And I think that they could release higher as well. I'm not sure which one to pick in retail and apparel and so forth, but in healthcare, it's a lot easier. The pharma names all look good. And I think the management, healthcare management stocks look good.
So how do you play the consumer discretionary trade then if stock picking could be hard, because we did hear from a lot of retailers, and
Yeah.
we're still hearing from them in terms of earnings, but a lot of winners, a lot of losers.
Yeah, our favorite is just the off price stuff. The TJX, which has had a big pullback, but sort of a weird execution issue last quarter, and it was something to do with their buying the wrong stuff. They didn't have enough of it. So I would put that on double secret probation, but going back to Costco, King Costco, and those names, even Walmart after a stumble, that was a one-time stumble. So yeah, if you want to take the risk and the volatility down in your account, you've got too much tech, then you'd probably add those bigger names.
Okay,
They've
so
had
we have
pullbacks.
tech, healthcare, consumer discretionary in the portfolio. What's out of the portfolio?
Utilities are out. I'm not sure if they're over there in a big way either. REITs are very small with us. Again, it fits in that dividend yielding lower beta strategy, and materials, which we want to own, but we're having a hard time, finding the right stocks. We own Ivanhoe Electric, which has a big copper mine coming online in North America and Arizona, Santa Cruz copper mine in next year. So I think that's a stock to look at, but it's a smaller market cap. It's not Freeport, right, or BHP. It's just smaller. So that name we own. We do own some Freeport, kind of running away here. But yeah, it's tough in materials, and the chemicals aren't going to work if the oil's moving through the Strait of Hormuz, because Dow and Lyondell, the reason why those work is they're using natural gas as a feedstock to make polyethylene versus all competitors globally who use oil. So those are off the board. So materials are tough. There's a lot that's off. We're very heavy tech. I would say we're 55% tech.
So you gave a lot of names. I'm sure our viewers will be happy to hear a lot of those stock picks.
Yeah.
If you could only buy one, safest bet of all the names that you've mentioned today, which would it be?
Arista. I took a big deep, and
I
Cisco
almost said that's
too.
not Nvidia. I was expecting Nvidia, but okay.
No,
ANET.
it's going to be Cisco or it's going to be Arista. And Cisco is like, everybody's like, no, I don't want to own Cisco because I think it's their dad's Cisco.
Legacy, yeah.
Right? The old business or whatever. Their products are great, and they're very well received for the data center and, of course, campus networking switch business. Very well received, and I think that's the name. That's, you're going to grab a dividend. So the slower name, the faster name is Arista.
Okay.
Yeah.
All right. Let's pivot to our rapid fire round of this or that, although we've kind of
we
included a few of those in already. You've played before. Quick questions, quick answers, no hedging. Are you ready?
Yeah, there's no clues either. There was no giving of clues. So
I don't give
blindside
the
me, I'm ready.
questions ahead of time.
I'm ready.
All right, here we go.
Yeah.
Cisco or Arista Networks?
Also, we just did that. I'm going to go, at the moment, Arista.
Buy this market or wait for a pullback?
Well, I guess broadly buy this market.
Stay invested or raise some cash?
Stay invested.
Tech, buy now or wait for another shakeout?
Buy now.
Semis or software?
That's a really good one. I think still semis.
Chips or networking?
Networking.
Google or Amazon?
I'm going to go with Google.
Nvidia or Broadcom?
Nvidia.
Change of answer there. Snowflake or Cloudflare?
Cloudflare.
Palo Alto or CrowdStrike?
Palo Alto.
Okta or CrowdStrike?
CrowdStrike.
Anthropic, friend or foe of the AI trade?
Wow, that's a good question. I think they're going to have to change the way they do things at Anthropic, to be perfectly honest. Eventually get there, maybe. I would say friend, because they're on the frontier. They're, but friend.
OpenAI or Anthropic?
Oh boy, I would say OpenAI.
Bitcoin at 80,000, opportunity or trap?
Opportunity.
Bitcoin or gold?
Gold.
All right, finish this sentence. The one stock I'd buy today is?
Marvell. Instantaneous gratification. You get a print this evening.
The one stock I'd sell today is?
Wow. Gosh, that is a hard one. God, is there a pass button?
How about the one stock I'd avoid today is?
Yeah. I would say I would avoid the hard disk drive companies. I think they're pretty rich, There's room for them to move higher, but they've had such a big run. So you're in the Western Digital kind of world, and that stock has been a little bit weaker. So put Western Digital in there, even though you're picking a fight with an amazing growth trend.
The next leg of AI leadership comes from?
Well, it's open source models, and it's gonna proliferate faster with the open source models. And now that Nvidia is in that business, apparently, and others, and that was kind of my problem with the Anthropic OpenAI question. I really think that lights it up here. Things are getting less expensive. OpenAI just did a price cut as well, and I think it's just going to drive adoption really, really quickly. So this is the part where it really picks up. And Jensen had some way of framing it. This is the golden age of startups and so on and so forth. I would believe him when he says that. I know he sometimes comes off a little promotional, but it feels to me like that's the case. And again, when you go back to that second quarter earnings prints from Twilio and Shopify and all the rest of it looks like crazy hockey stick. So,
the most misunderstood trade is?
I guess the pain trade is, I think, misunderstood. When and where and what's the place to be. And I think, like I said, cash is the pain trade. So waiting for the midterms, which I've heard from clients and so on. We love our clients, but sometimes we're getting the consensus view, and the pain trade's all about taking the other side of the consensus view. And I do know that there's a lot of cash on the sidelines, and so yeah. Keep your eye on that. That's been the most consistent trade all year. If you can identify where everybody's sitting, you go take the other side, and that's paid off.
The one thing that could break this rally is?
I think it's widening credit spreads. There's just so much that you can absorb, the investment grade market can take in terms of new issuance. And you've got, Broadcom $60 billion deal that comes in. It's hard to bring it to in the middle of summer vacation season. But all the debt issuance that's coming, $250 billion from the hyperscalers. Next year, it looks like $400 billion probably in what they'd like to get done in issuance. And I just think it has to happen a little slower because the market can't digest that. They're not natural buyers.
The smartest move a retail investor could make today is?
I would make sure, know what you own. Add positions when they're oversold only, and try to hang on to the winners as long as you can. There's a lot of sage advice in there, but I've been doing this for 41 years. You got to sell the losers and keep the winners, and it's pretty apparent. Once you buy it, you're going to know right away if you have a winner or a loser.
But you couldn't think of a loser to sell.
I know, it's rough. I've already sold them, that's the thing. So yeah, we don't have any losers in the book right now, and those are the names that we follow. So we're happy to take a realized loss so long as it's small. Keep it tight, like 15%, and then we're going to move on. We're going to keep that. It's like a tax asset, and then take that cash and redeploy it. We want to redeploy whatever cash we have right now. We're finding it difficult, but we'll get there, I think, in the next couple weeks.
Okay. All right. We'll leave it there. Andrew,
Good.
Thank you so much. Really appreciate it.
Thank you,
Lots
Caroline.
of good picks, lots of good insight. That's Andrew Graham, Managing Partner at Jackson Square Capital. If you enjoyed this Street Talk, check out our full interview with Anastasia Amoroso. She explains why the AI trade is changing and where to invest next.